Now, South Africa plans to tap international markets for as much as $3 billion as the country seeks to take advantage of relatively low rates and strong demand from yield-hungry investors. South Africa has budgeted to raise about $3 billion in international markets in the next fiscal year. Now, though the funding period only starts on April 1st, the country has pre-funded in the past. African sovereigns, including Kenya, Nigeria and Senegal, have sold about $10.7 billion of Eurobonds in 2018, with record demand from investors. Well, South African assets have outperformed emerging markets overall since late last year. The rand has strengthened about 22% against the dollar since mid-November, the highest globally. Well, Angelo Coppola now joins us in Johannesburg with more insight into this. Angelo, welcome to the show. Now, there are favorable market conditions for an issue of a Eurobond currently, as we mentioned earlier. But some are saying, Angelo, that the government should first wait for Moody's ratings agency to first release its review of the country's credit ratings, which, of course, will come later this month. So give us a sense, Angelo, of how the market feels about this Eurobond issue.
Well, it's interesting that National Treasury feels that the time may be right to go back to the international money markets. Treasury officials tell me that the timing of the issuance of that $3 billion bond in the international capital markets will be opportunistic and will depend on market conditions. Now, market conditions here probably refer to the possible negative rating agencies' announcements that may happen in the next couple of weeks or next couple of months. This either suggests that the bond issuance either suggests that there's no action that's anticipated by National Treasury, or that officials believe that they're going to be talking to their books, so they want to sort of talk it up. But it's all about the institutions and how they feel about the risk of a downgrade if it does happen. If they think there's minimal risk, then they'll get involved. If there's going to be any kind of a downgrade, then they won't. They'll obviously do their research, they'll talk to the South African opinion leaders and asset managers, and then they'll make a call. But essentially, it seems like the market is wanting to get involved in South Africa from an international perspective again. Ucha?
Well, Angelo, S&P and certainly Fitch, they've already downgraded the country's local currency debt to junk. And some are speculating that Ramaphosa's new budget may not be enough to avert another downgrade. What are your thoughts on that?
Well, the consultations that took place between the ratings agencies and National Treasury and the Minister of Finance when he was in place then did point to a little bit of anxiety. Raising the VAT rate by 1% was seen as a partial solution to the expenditure side of the equation, but it doesn't deal with the bloated public sector and that resultant huge wage bill there. Ramaphosa has said in his State of the Nation address that he would evaluate the size and number of government departments, as well as ministers and deputy ministers. This would take several months, and it does give Ramaphosa several months' worth of breathing space in which to sort things out. There was also some anxiety by the agencies around the overexposure of the government fiscus to several state-owned entities. Despite this, analysts do say that action is being taken. For example, at Eskom, we've seen a new board and management. At SAA, they say they're working on a turnaround strategy. And in fact, just yesterday, 2 senior executives were replaced due to corruption allegations. So it's generally argued by some that it's the most positive action we've seen on the state-owned entities in the past decade under Zuma's rule. So there is some anxiety, but it looks like to be a work in progress, Ucha.
Now, in addition to that, Angelo, South African assets have also outperformed emerging markets overall since late last year. So which, of course, shows a good sign, favorable conditions. What do you think will drive demand, however, of this upcoming issue?
Well, you've already mentioned the South African currency against the US dollar, that 22% jump since mid-November. That's good news. And then perhaps the key point, though, is that South Africa's foreign debt is less than 10% of its total borrowings. So there's scope to tap the foreign debt markets to fund their foreign currency commitments, because that's the reason they're going to the market. Local debt markets, of course, are saturated. Many of the banks here are exposed in one way or another to the state-owned entities and their debt instruments. And with Zuma gone and Ramaphosa honeymoon still underway, this may be the right time to tap that market, provided that the ratings agencies play ball. And this is what Treasury and government are hoping will happen, Ucha.
Well, we'll certainly be watching. Many thanks, Angelo, for your insights. Angelo Coppola joining us there in Johannesburg.